Hello everybody, welcome back. So, I've not seen it myself, but I can imagine the state of YouTube. Bitcoin thumbnails today, I bet there's some amazing pictures of people's faces wide open, eyes wide open, people holding their heads. Oh my god, you must see this, blah 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 blah. Look, when an asset goes up, you know, how far has it gone just in the last 6 months? I mean, it's kind of ridiculous. I kind of lost track. We'll just measure it from when we reclaimed the green 50. When an asset goes up 500% in 6 months, especially something like Bitcoin where there's an enormous amount of money involved in it, you know, it does have to come down a little bit, you know, it does have to come down, and so far we've come all the way down to test that 200 exponential. That is only a 35% move. Now I say only, I mean, if you're like me and you dabble in the altcoins probably more than you do with Bitcoin, 35%, you know, you take that, that's just part of the deal, isn't it, really? I mean, 35% down, you know, no big deal whatsoever, you know. And yeah, I mean, Bitcoin isn't an altcoin. It moves up slower, goes down slower, and it's still subject to the same kind of vibe, and the same rules apply. In fact, there are rules that apply. They probably apply to Bitcoin probably more than any, because it's a highly traded chart. It's even got CME futures, you know. It's a big deal. There's a lot of money that goes into this one, and so yeah, we've gone up and we've come down, and look where we tagged. We hit almost pretty much exactly the 200 exponential moving average, which I did say yesterday was an intermediate area. Before we probably, to be honest with you, we probably do take another leg down to about 38, I would say, just give or take 38, where there is a strong level of support, and we can see that if we go to the weekly. It becomes more obvious when we see it on the weekly, down here. So we got wick, candle body, wick, candle body, launch pad. So that, in my opinion, is a very strong chance of maybe even the bounce that reverses this. But because at the moment we've broken down below the center of this Bollinger Band, or the 20 weekly and the 21 weekly EMA, that would be, it does lend itself to definitely a bit more of a further downside. But that's not without some relief rallies, and the relief rally is already taking place from the most obvious place. On the daily, we've got one moving average below us, which is this one, the 200 exponential, which, you know me, I love my exponential moving averages, and this one is always a very important one. The problem would be, though, if we do break below here, which I do expect us to break down below, if we stay below there for a long period of time, we get a negative slope on this one, then actually that would be a bear market. I mean, you could argue that we're already in a bear market now because we're moving down, but I wouldn't call that a bear market. No, I wouldn't call that a bear market. I'd call it a strong correction, definitely, but no, I wouldn't call it a bear market. Bear market territory is when the price action is below here and we're being rejected from here, and that basically will then gather strength. Now let's just go back in time to see if there's any examples of the last time that happened, because again, we have been in a bull market for about 2.5 years now. So yeah, big launch pad here. This is where the bull market began. Okay, so bear market ended, accumulation began, launch pad took place, golden cross, and then everyone got too overexcited, and we really did literally go too crazy on this one. Derivatives were going mad, everybody was going crazy. Is this still recording? Yes, it is. The derivative market was unlike it had ever been before. There'd been derivatives before, but not in the same way. So, I mean, it had just gone too fast, too crazy, and then consolidation. I wouldn't even call it that, really. I mean, it is a consolidation, but it was a giant correction. It was a dump. It was a crash, really. Anyway, we broke down below the 200 EMA here. Came up to retest it, rejected, further down, come back up. We did break above it ever so slightly. I remember this wasn't your average situation. This was born out of, I can't remember exactly what it was, something to do with China and Bitcoin. something like that. It was a bit of an anomaly, and you can see how it just got sold back into, made lower lows, and then finally found its bottom. This was the bottom. Obviously, we made a deeper correction. This was the March crash, so could not really be accounted for, that one. But again, this was the bottom here. You can see that we found our way back up here as the double bottom was playing out. Rejection, 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 launchpad, retest, move, and then a golden cross. Fair enough, a dump down into it, but then COVID kicked in and blah blah blah. You know the rest of the story. Anyway, the worst case scenario is that we do break below here, that 200 EMA, and in the past what we've seen is that when we do break below there, you know, in a bull market, which is what we technically are in, we're not down there for a great deal of time, but we do use it, and it does prove to be a rejection, and that technically could enter a bear market, but the odds are in our favour as far as the market cycles. Definitely points to a higher Bitcoin over the rest of this year. And if we did break down below here, we've got very strong, tangible support levels, which we've just looked at here, 38,000 and then finally 28,000, which should all offer us that opportunity to get the bounce and reversal. Now we are talking about big figures here. I mean, we're talking about, you know, an asset which at its peak was about $65,000. Further correction down to the 38,000 from the price that we're at right now. There's a further 15%, and then all the way down to the bottom there would be a 36%, give or take. And if we were to measure that from the absolute top down to the bottom there, that would be a correction of about 55%. So again, you know, if we measure this in terms of how altcoins have behaved, if you trade altcoins, I know we do on this channel, it's not a big deal, really. Even down to that bottom bit, it's really not a big deal. You've got to think about it, putting it in context like that. You know, this is cryptocurrency, it's a volatile asset. My preference is always the more volatile, and I am no mean moon boy, and I'm very conservative with my trades. But I take hits all the time of 40, 50%. In fact, it's part of the rhythm of the chart for some of these things that we trade. And if we have to think about how this corrected from here down to here, which is what we'll measure, we're not going to measure all the way down to the COVID crash, we'll measure from here to here. That again was a 53%, so again, very much in keeping with the way that Bitcoin can behave in the form of a downtrend or a correction or a consolidation or whatever you want to call it. So personally, it's all part of the game. Do you know what I mean? It's all part of the game. Now, obviously, there's been a few little. There's been people poking the hornet's nest, as you could say. Elon Musk, you know, doing his thing. I think somebody needs to rein him in a little bit. I've always said it, from back in the day. You know, if you're essentially pumping the price, or manipulating the price, or even just influencing the price with tweets, the chart will come back to its natural progression. So whether it goes up or down off the back of what somebody says or does, the chart is key. The chart still remains. So it doesn't matter who said what or when, so long as there's not been an enormous fundamental change in the asset or coin that is you're trading. Tweet all you like. All you're doing really is speeding up the process of, I suppose, the consolidation, which if you think about it, could actually be a good thing, because you'd rather get it over with and get back into the swing of things than have this play out over a period of months, which it probably would do if it was just left to its own devices. So I'm not massively bearish. Of course, there's almost certainly going to be more downside to it, but I'm not massively bearish. And I've said it before. I said it on my live streams. You know, it's all part of the game that we play. Okay, you've got to put your trust into an asset like this if you're going to trade it. I mean, this asset, Bitcoin itself specifically is is an asset that is built only upon real trust. To be honest with you, it doesn't do anything. It is what it is, but it doesn't actually do anything. Its value is decided upon by the amount of people that have decided on its value. It doesn't do it. It's not like buying into, I don't know, Apple or something like that. That you're not safe, but you have a reasonable degree of certainty that they will continue to develop some new technology that people will want to buy. It's got value to it. Whereas Bitcoin doesn't develop anything, doesn't really do anything. It just is what it is, and we decide whether it's got value or not. Now, there's a lot of people out there that have decided that it's got value. Elon Musk being one of them, as far as I can see. But right, like I say, it is an asset that's built on trust, and so you need to trust it if you want to trade it. If you feel like you can't trust it, maybe this isn't the thing for you. Maybe something a bit more tangible would suit you. And there's nothing wrong with that. I often make the analogy that sometimes, if you think about what you're doing with cryptocurrency, think about what it is that you're trading, it can become a little bit too overwhelming, really, just the concept of what you're trading. Altcoins are different in a way, because you could look at them like stocks, but I like to think that, it's like if you ever look up into the night sky and see all the stars, and then suddenly have that dawning realization that you are nothing but a tiny little speck living on a little speck in the middle of space, and all that you know of reality is actually, as real as it is. It's absolutely minuscule in the grand scheme of things, and then normally I go, right, that's enough for me. I'm not going to think about that anymore, because that's too much. Which is what I like to try and do sometimes with Bitcoin. I actually think about, hang on, what is it that I'm actually doing here? What is it that I'm actually trading? It's oh my god, right, let's just not think about that. Let's not think about that. Let's continue with the whole trust side of things, which is, like I say, it's worked out so well, but try not to think about it too hard, because the more you think about it, the crazier it really becomes. Anyway, further downside almost certainly at this stage. Time frames kind of difficult to pinpoint, but a correction of this size down to these levels, is what I would expect at the very most. So between 28 and 29,000, and that would be the lowest I would expect it to go. If it did go below then obviously it's a big deal. It is a big deal. And I will begin to lose trust in it myself. But at the moment, I'm perfectly fine with the way that this is shaping up, and further downside is fine for me. A lot of people will be getting shaken out, and that's fine. Personally, I do have plenty of tether to buy dips with, but my dips are going to be chosen specifically front running these areas. Here, I got in one just recently, just above this 200 exponential. Always front running these areas, always front run the areas, just in case we bounce just prior to it. Like I say, there will be a lot of people wanting to buy these dips, whether or not YouTube make you feel that way or not, or Twitter make you feel that way. Buying dips is still an appropriate strategy in a downtrend, when the market cycle is in your favour, which is what it is. The market cycle is in our favour. However, I do have to say, and I've said it again, that there is more likely further downside, but the upside is also very likely too. I don't mean from this exact level. I mean it could bounce from this level. Nobody really knows how deep this correction is going to go. But again, further upside is almost guaranteed on the long-term time frame. So if we have a look on the 4 hourly, just for what it's worth, obviously pretty bearish, and we also have a bit further of our bullish divergence, ever so slightly, nothing too major, but it still exists, and because of that, I'm reasonably confident that we will get this decent bounce now, and the bounce for me It could even take us to just short of 50,000. So I know I'm skipping around on these charts a fair bit. The breakdown zone here, give or take 50,000, we could call it 49,000 to be safe. Also the 10 exponentials coming around about 50,000 too. So we can think about this as an area of resistance where this bounce could lead us up to. Now breaking above here would be great, and that'd be lovely. I'd love to see that, but doesn't necessarily have to happen. I'd be surprised if it did happen, given the weight of the situation. But if it did happen, that's great, and we would likely go all the way up to around about 54. Personally, you know, it's one of those situations where you just have to leave it to play out, yeah, I'll let it do its thing. I've still got plenty of bot trading going on, because you know this is another beauty of what bots can do. They can earn you more crypto in a downtrend, in an uptrend, in a sideways market, and especially when there's volatility like there is today, or I suppose that, you know, the last couple of weeks really, that volatility is very much enjoyed by the bots. Even if the portfolio balance is going down, the end goal is that I'll be accumulating more crypto on the way down. So by the time I come to, I suppose, what would for most people be a break-even area, or back to where you started from, you'll be better off because you've got that extra crypto that you've been earning through the bot trading process. So again, it's time not to go crazy, not to be scared, not to go crazy. I mean, the fear and greed index is extremely low, about the same as it was back in March in the COVID crash. Now, that's not an indicator that you can trade upon directly, but usually the best thing to do is to look at when people are scared and fearful, and kind of buy into that, and if they're selling, then you buy it. And again, the opposite would be the case if everybody's super turbo bullish and calling for $1 million Bitcoin, you know, saying how much of a millionaire they are, and blah 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 blah. That often is a telltale sign. It's one of those things, I'm sure you've had people recently say to you, oh, but what's all this crypto stuff? I was wondering if you could help me with that. You know, people that, you know, a couple of years ago would have been laughing in your face going, isn't that the thing that crashed from $20,000 to $3,000? You know, so not only when your next door neighbour and such call you up and ask for help getting into it, sometimes that's a telltale sign that it's a little overheated and whatnot. So anyway, like I say, I'm rambling again. Tomorrow is the time for rambling. If you want to join my Patreon, we do 2 live streams a week. One of those will be on Tuesdays, the others on Fridays. I've got a separate Telegram chat just for the Patreon users. I've got a free one, the link's in the description below for that one, and you can join in there. Bit noisy now, there's quite a lot of people in there, but if you are a member of the Patreon, obviously you get those live streams, you get some tutorial style videos on the Patreon, and you'll also get access to the private Telegram group. Anyway, thank you for watching. I hope you have a nice day, and take it easy.